Hello and welcome everybody to today's edition of Mexico News Network's Breaking News Business. I'm your host, Elliot Bullman. Remember to follow us on all our social networks and to catch us every day by logging onto our website, mexiconewsnetwork.com, for relevant stories and news. Let's start with today's show. The Dow Jones Industrial Average, arguably the world's best-known stock market gauge, closed above the 19,000 barrier on Tuesday for the first time in its 120-year history. For the second straight day, all four major US stock indices touched new record high territory. The Dow jumped 67.18 points, or 0.4%, to close at a record high of 19,023.87. In a day of milestones, the benchmark Standard & Poor's 500 stock index closed above 2,200 for the first time ever. The Nasdaq Composite rose to an all-time closing high of 5,386.35, and the Russell 2000 closed at 1,334.34. Its 13th straight session of gains, its longest winning streak in 20 years. Gold also posted its first back-to-back increase since Donald Trump's election, while copper paced gains in metals. Oil fell after an OPEC committee failed to agree on Iranian and Iraqi production levels. Dow 19,000 is the latest signal that the rally sparked by Donald Trump's surprise presidential election win is broadening as investors continue to bet on the prospects of a more investor and business-friendly White House and Congress. Equities rose on speculation the United States economy is strong enough to withstand higher borrowing costs. A rate increase could well become appropriate relatively soon, Fed Chair Janet Yellen said last week. The dollar is flying after Donald Trump's victory, and the rally should continue into early 2017. Thereafter, the greenback could weaken, said Royce Mendez, an economist at CIBC World Markets. Moving on. According to the current federal administration in Mexico, 2.5 million jobs have been generated this year, which means that 1.2 new jobs are being created in the country every minute, said the Secretary of the Treasury, Jose Antonio Meade Curibreña. As a witness to the signing of a collaboration agreement between the Mexican Social Security Institute and the Confederation of Mexican Workers, the official said that this is something that has never been seen before in the history of the country and is a sign of tranquility, hope, and assurance that there'll be a good future. Jobs are being created because we've worked together, because we've agreed on reforms that are important, because we haven't folded in the face of adversity, because the workers, the federal government, and its institutions work every day with commitment, he said. Accompanied by the Director General of IMSS, Miquel Arriola Peñalosa, and the head of the CTM, Carlos Aceves del Olmo, the head of finance stressed that in recent years, the financial situation of Social Security has changed because of the quality of service. The IMSS is concerned that beds are ready to receive patients and that hospitals have better care, that doctors and nurses work on weekends to reduce the time we have to wait for them to give us attention, he stressed. On the other hand, Meade Curibreña called to continue preserving the stability of public finances and maintained that in an environment of international volatility, the Mexican economy must continue sending signals of certainty. For this reason, he said, Mexico has to correctly apply the economic plan for 2017, as this ensures the stabilization of debt and achieves the goal of creating a primary surplus. Finally, he explained that this will be done because a difficult global environment prevails, not only for Mexico, but for the world, which forces the country to build the strength of its national economy. In other headlines, Mexico's economy posted its fastest growth in more than 2 years on Wednesday, and the government stuck to its outlook, insisting there was no tangible threat from US President-elect Donald Trump, who has threatened to tear up a free trade deal. Mexico's economic growth accelerated in the third quarter, with growth in services continuing to offset weaknesses in industrial production, the National Statistics Institute said on Wednesday. Mexico's agricultural sector grew 2%, the data showed, while services advanced 1.4%, the fastest quarterly expansion since the third quarter of 2011. In annual terms, the economy grew 2% compared with the same period last year, in line with forecasts. Mexico's GDP grew 2% between July to September this year, according to the latest figures received from the National Institute of Statistics and Geography. According to INEGI, GDP grew 2.3% during the first 9 months of the year compared to the same period in 2015, as a result of growth in the service sector by 3.4% and 2.4% in the primary sector. Deputy Finance Minister Vanessa Rubio said the government still expected the economy to grow between 2 and 2.6% in 2016, pointing to solid consumption despite weak factory production and lower oil output. Mexico also held to its 2017 GDP forecasts, Rubio said, even after private sector economists cut their outlook for next year on expectations that US President-elect Trump could enact policies that hurt Mexican exports. The United States is Mexico's top trade partner. Not one policy has materialized, and now what we have are expectations. They're suppositions, and we have to work with concrete issues with enacted policies, Rubio said. And finally, let's take a look at the markets. The Mexican peso increased 0.27% to 20.7 from 20.64 in the previous trading session. The peso changed up 1.36% during the last week, up 11.78% during the last month, and was up 25.37% during the last year. IPC Mexico increased 0.67% to 45,168 from 44,869 in the previous trading session. The IPC Mexico changed up 0.59% during the last week, down 6.74% during the last month, and up 1.33% during the last year. This was all for today. Thank you for staying with us. I'm your host, Elliot Bullman. Remember to follow us on Facebook, Twitter, and Google+. Log on to MexicoNewsNetwork.com for more information on Mexico and the world. Until next time.